Hello everyone, welcome to SST College of Arts and Commerce. This is SST Edupedia. I am Assistant Professor Deepika Valecha. Today we will be discussing about a topic which is reconciliation of cost and financial accounts, which is there in cost accounting subject of second year banking and insurance course. Now, what do you mean by reconciliation first? What is the meaning of this word reconciliation? Reconcile, it refers to equate. What do you mean by equate? Here, there are various branches of accounting. We have financial accounting, we have cost accounting and management accounting. So, the books of accounts as per in financial accounting, books of accounts are prepared as per the guidelines given by ICAI, that is Institute of Chartered Accountants of India, and here some of the expenses and the incomes will be recorded as per the system which is given by the ICAI. So, for the purpose of calculating the net profit for the year, at the end of the year, financial statements are prepared, and in which, with the help of profit and loss account, a financial accountant will be able to find out that what is the exact profit for that particular year of any particular company or a concern, trading concern. Now, if we talk about cost accounting, in cost accounting, the methods, the rules are followed for the purpose of preparation of cost accounting records, which is given by ICWAI, that is Institute of Cost and Works Accountants of India. In that, there are some expenses which are recorded as per the guidelines given by them. So here, there may be a possibility whatever is mentioned in cost sheet at the profit as per the cost sheet may not tally with that of the profit as per the financial records, that is profit as per the profit and loss account. So, for that purpose it is very important to reconcile and to find out where is the difference, why both the books of accounts are not tallied. So, if we see the introduction part, here it is mentioned when the cost and financial accounts are maintained separately, that is in profit and loss account as given by the financial accounts and also in cost sheet as per the costing records, then there may be a possibility that both the records may not agree. So, to find out where the difference is, we will prepare a statement which is a reconciliation statement. Now, what is the need of reconciliation? Why it is required to prepare a statement of reconciliation? To find out the reasons for the difference in both the statements, we need to find out why there is a problem in terms of why the profit as per the financial and cost records are not tallied, and also to ensure the mathematical accuracy and the reliability of cost accountants as well as the financial accountants, whether they are actually preparing the books properly or not, to find out and to facilitate the coordination and promote the better coordination among both the type of accountants, and also to place the management in a better position to acquaint itself with the reasons for variation in the profits. So, management people will be aware about why there is a difference, what are the problems in relation to both the accounting methods. There may be a situation where in cost accounting, closing stock is valued at one price, and in financial statements closing stock is valued at any other price. So, the difference may surely occur. Now, what are the reasons for the differences? there are the various reasons, like it is differing the treatment of certain items in cost accounting and in financial accounting. Let's say for an example, if depreciation is on plant and machinery is charged as per in financial accounts, it is charged as 4,000 rupees, and in cost accounting it is charged as 5,000. So here definitely in financial accounting, if we calculate according to the financial statement, so here the possibility is depreciation, that is a loss which is charged 4,000 in financial statements and 5,000 in cost statements. So if we calculate it as per the financial statements, so here 1,000 depreciation is undercharged, that means it is under recorded, or you can say undervalued in financial statements. Now I would like to add one thing here. There is the direct relation between income and profit, and there is the inverse relationship between the expenses and profit. Now what does it mean? Income refers to, say for example, commission received of 2,000 rupees. So if commission is received by one particular company or one particular person, so definitely that is the income, and that income will be added to the profit. So the profit of the company will increase by 2,000. So that means if we receive income and it will be added to the profit, there is a direct connection between the income and the profit. If we talk about the expenses, here there is an inverse relationship between the expenses and profit. That means what? If you write the expenses, undervalue the expenses, say for example for 1,000 as we discussed in depreciation example, so the profit will increase by 1,000. So here the situation will be in financial statements 1,000 is written extra in terms of depreciation. So these are the treatments which we have to see when the same value is written at both the places, but we have written the different values in financial and in the cost accounting. Coming to the second point, which is items appearing only in financial statements or financial accounts. There are certain items, say for example income, which we write in profit and loss account credit side, that is commission received, discount received, profit on sale of investment, profit on sale of import license, or it may be rent received. All these incomes are recorded only and only in profit and loss account. These income are not at all considered into while preparing the cost sheet in cost accounting. So surely there is a situation of deviation in the profit. And also there are certain expenses as well which we record only in financial statements. Say for example, we have bad debts written off, miscellaneous expenses written off, and also we have like a preliminary expenses written off. These are the expenses which we are not showing in the cost sheet. So definitely the chances of the deviation will occur. Then there are some items which are recorded only in cost account. Now for example, notional rent. Notional, that is imaginary rent for a particular asset which is the asset of the owner itself, that is not at all considered into the financial statements, that is only considered into the cost sheet. So there is a chance of variation. Now let's see some of the examples of the expenses and incomes which are purely written into the financial accounts, that is in profit and loss account. If we see the examples of expenses, we have loss on sale of assets, on investments, discount on issue of shares, interest on bank loan, interest on debentures. We do have damages payable under the law, fines, penalties, and also expenses on the transfers, and also goodwill written off, miscellaneous expenses written off. All these are the expenses which are written only into the financial statements, not into the cost accounting. And also there are the incomes which we consider only in financial statements, that is interest received, dividend received, commission received, brokerage received. So these are some of the examples, and also the examples continuing with items only in the cost accounting which we record, that is notional interest, that is imaginary interest or notional rent, and also fully depreciated assets still used for the purpose of business, and also salary of the proprietor. Salary of the proprietor is not recorded into the financial statements, but here we consider. Now, what is the procedure for preparing the reconciliation statement? Step number 1 is start with taking any one of the figure of profit and loss account. Now, in your question, you will be having both the profits, that is profit as per the financial statements as well as profit as per the cost statement. So it is your choice. You can start with profit and loss account or else with the cost sheet. It is up to you. You can take any one profit, but you need to be sure whichever profit you are taking. For example, if I am taking profit as per the financial statement, so I have to calculate and I have to proceed my problem as per the financial records only. Step number 2 is the various reasons for the disagreement as discussed in the preceding sections between the profit disclosed by two sets of books in a particular case are ascertained. Now we have to find out what are the various reasons. As we have discussed, some of the questions may be like some of the records are maintained only in only in cost accounts or only in profit and loss account, and possibility is there are the deviations of like either I have written only the depreciation amount is written at one value is written in financial statement and another is written in cost statement. So we have to find out the deviations and what are the reasons for the same. Now step number 3, we have add those items of the differences which have the effects of increasing profits and in the set of books of accounts, and subtract those items of the disagreement for the profit because of which the profit will decrease. So if we are going with the question based on the financial statements, so if because of that particular disagreement, if profit is going to be increased, we have to add the value, and if the profit is going to decrease, we have to subtract it. Let's see the format, or you can say a pro forma of reconciliation statement. So as I already discussed, we can start with either with a profit as per the cost accounts or with a profit as per the financial accounts. Is it? After this, what you can do, add all those items which are which we can add as per the financial statements, and also subtract some of the things which we can deduct. Like we have depreciation, which if we have overcharged the depreciation, we will add that value. If we have undercharged that depreciation, we will deduct that value. So in this way, once all these items will be added to the cost accounting profit and some of the items will be deducted, and then finally we will be getting profit as per the financial statements. So in this question itself, we can see whether our answer is correct or wrong, because as we have already both the profits we have profit as per the cost sheet as well as profit as per the profit and loss account. So here in the question itself we get our answer, because if we start with the cost accounting profit, that the answer should end with the financial accounting profit. That means both the figures will tally. So in the question itself you will understand that whether you have correctly solved the question or not. So I hope this financial statements format is clear with you all, and you all understood the basic concept of reconciliation of cost and financial accounts profit. Thank you so much. Thank you.